Hi, this is Elliot Wave Sage. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education, entertainment purposes. So I'm recording this here in Florida while I still have power. I expect to lose it at some point. So I want to get this video out because it's got some very important information I need to share with everyone because a lot of investors are not paying enough attention to the market. We have extreme complacency going on in the market. I want to go through the market and share my thoughts. The market is on the verge of a super crash and a top, and the crash could play out as either the 1929 style crash or a long drawn out 1970s bear market. But either way, the indices are going to have a significant correction that will begin, that will could take it all the way back to the COVID March 2020 lows in the indices, and then individual stocks much lower. And of course, it's not a straight line down. There will always be a three-wave move of some kind. So there's a lot of trading opportunities. But what we need to be careful of is this FOMO, this all the cliches out there that there's money on the sidelines. Oh, a guy coming on saying China is ready to stimulate and pump their economy, and oh, my bad, it maybe not as significant as we thought. So you get all this false information out there, and a lot of investors trade on that information, and they end up losing. Usually, that information is used to manipulate the market, and not actually used to analyze it in the way you think. So given that situation, the market is in this fifth wave higher. Today we made new highs. So now we know we're not going to get this 4 and a bigger bounce, this end of the year bounce. So there's a lot of folks out there talking this end of the year melt up or whatever. Well, that shit is not happening. That setup is lost now. So now what do we got is this fifth wave. We're in this fifth wave, in wave 3 of 5. And, and again, depending how I want to label it, right? I could label it this way, just like that. And I could call it even complete, and it is in the sell area. The first entry into the sell area, I would want to see it push a little higher to be sure, but we're in this fifth wave. This is coming to an end. This is coming to an end, guys. And at some point, then some catalyst will happen. Choose your catalyst, and people won't be able to sell fast enough. And a lot of the people that are trapped and complacent is actually not retail. It's actually not retail, and not people that follow, and trade on Twitter. They're pretty aware, and they could get out, at the first sign of trouble. Who's complacent in this market is your professional institutional funds, the guys on CNBC that come on. They're asleep at the wheel. They're punch drunk with euphoria, delusion, and they have no clue about the amount of risk they're taking. Even the most bearish investors, like, well, I still only have 10% cash. I'm bearish. Like this, how's that bearish? So those people are the ones that are going to be the ones blown up, because they will hold all the way until the very end, and then they will capitulate because they'll be forced to, as their clients flee en masse, and many of those firms go out of business. That's how it's going to happen and go down. And so like in 2007, what we saw was, retail complacency, mom and pop investor complacency, right? And actually the professional investor saw the top, and they told everyone to get out. The famous, Kramer get out in a market speech, the Fed knows nothing. They saw it coming, and they saw the top in process happening, but retail was asleep at the wheel. But I think this is the opposite situation. So that's why a lot of people are like, well, how can the market crash when everyone's saying it's going to crash? Well, not everyone is saying that. Just a few obscure channels on Twitter that really no professional investor follows or listens to or takes seriously. But you, because you follow me, and there's a few others, and I retweet their charts, and they use a different system, and they come to the same conclusions. 3 different analysts are saying the same thing, and now even the most bullish Elliott Wave analyst knows this market has to have a major pullback on a bigger, higher degree cycle. Even if we are going to go higher, and not completely collapse. But what this drawdown will create is buying opportunity of a lifetime for those that have money left to actually put it back in at the right moment. And we know how to do that if you follow me, how to be patient, when to put money in, and then when not to put money in, and when to just ignore the market. So this is a red alert update. We're close. We're very close. It could still extend. The extreme target area is 610. That was my target I gave on January 1, 2024, which many people thought was delusional. Elliot Wave Sage was delusional for that target, but it did. I don't know if that has enough steam to play out unless this is a 1-2-1-2 setup, and we really on the CPI tomorrow gap and run, like we open up at 585. You know, the Dow's up 1,000 points or more, then maybe we can get to those higher targets. But I think we're close to the end of this end of the line here. A lot of bearish divergence. So let's look at the Dow Jones real quick. So the Dow Jones has a couple counts here. We haven't taken the high out, so this actually could already have peaked, and just we don't know it yet. Now, if we do take this high out, of course, this would be a 1-2, and we would need a 3-4-5. Again, I would be looking for somewhere around 43,600 in that area, in that ballpark area. Here, I believe we'll have to wait and see if that top is already in, or we'll go higher tomorrow and extend that fifth wave. The triple Qs, I do think it looks like we will take this high out. We will more than likely stay below this level. So I'll just kind of update the count. So what we're going to have happen here is an ABC, WX, ABC. Now this C will have to be very sharp and vicious to erase the divergence on the daily time frame. And we got some of that today. We need to erase this peak here. Once we do that, then the sequence can end at any moment. And once that happens, we should be good to go with the peak in the NASDAQ. Now, what happens if we break above this high? Well, if we break above this high, what this sets us up for is the more bullish forecast, where we get a big drawdown, but then we rally out of that and we extend to wave 5, like some analysts are calling for that are out there that do Elliott wave analysis. They're not predicting a mega crash like a big multi-year bear market or a fast 1929 crash and it's over before people realize what happened. Here, like the bear market I see coming before us is we lose the whole fifth wave, which is this wave here, and we would come all the way back down into this lower area, more than likely tagging 215 or possibly even 186 on the SPY. I know it seems unthinkable, but that's unfortunately what will probably happen. Now, how does this play out? This is the classical way, right, for it to play out. And you get this left shoulder, head, right shoulder, breakdown, capitulation, and then the moves over. Now, what I'm trying to say is there is another alternative count that extends this fifth wave, where this whole sequence is 1, right? This is wave 1 off of that COVID low, and we come back in 2, and then maybe we come back down to like 476, and then we actually extend out and get a more of a mania blow off top in 2025 into early 26, something like this. This is still technically possible with the Elliott wave theory, because you have a 1, 2, 3, 4, 5. So this is the area, and there would be a back test of that breakout. You'll come back test that, hold that channel, and then we would come out. So this is the likely path if the NASDAQ can actually break this high in the next several sessions. If the NASDAQ breaks this high, I still expect a C leg, but then at some point that would find support and we would actually go into a mania mode in the market on the wave 5, a wave 5, and then a top and a crash. Losing it all again, only extending the fifth, which means we still eventually come back to the COVID lows, but just from higher levels. So that is also something to keep in mind as well if you're trading the market. And But the first clue that that could take place would be a break of that high, this all-time high. To me, that would also signal that this would be supported, and then this could even be a 1, 2, 3, 4, 5 out. And if that happens, we could come back, be supported at 470, and really extend. So you could have a buy here and another buy down at 420. So there's a lot of possibilities. So this is a very important index that needs to be saved by the market maker and the pumpers at all costs, and they're trying to do that so hard, but it is a lot of firepower being wasted. And the question is, do they have enough to break this high or not? If they can't, then the uber bear case is intact, in my opinion. Now the IWM, moving on, is really a tough call to make. We could I can easily label it completed with a 3 swing move in this final leg higher and a WXY corrective structure, or I can change it to an ABC corrective structure and give it one more high to 240. So there's a lot of options here. This could easily have already peaked. It could take one more high in a 1, 2, 3, 4, 5. But whatever it is, I don't like trading it sidelines. It actually looks pretty weak, especially with interest rates rising. If rates are rising and the energy complex is getting a bid and commodities are coming back to life, what did that do last time? That destroyed the Russell. So if that dynamic has now taken shape and will continue to play out, then the Russell's already peaked, unfortunately. And then this would be a 1, 2. And right now, it could be the short of a lifetime in the Russell right here, right now, if that's the count. If this is the count right here, right now. Could that be the case? Don't know. We'll have to wait and see what happens. It's just kind of a 50-50 guess at this point. So there you go. You've got a couple charts here. The SPY could top at any moment. I think more likely around 588 here. But you still can't rule out a bigger push higher to 610, even that level. The Dow Jones breaks this high. I think it sets you up for 43.8, maybe even 44,000, a nice round even number. And then the triple Qs want to stay below 504. If we break it, then it could definitely extend into the expanded flat extension, which is 523, and then get rejected all the way back down to retest this low. But that would also give us a clue about the future on the market and if this wave 5 will extend even further, or has it in fact really peaked and the market's peaked here. So that's the alignment. That's what we're going after. And like I said, right now, everyone knows in Elliott wave theory, with every advance, you have a 3-wave pullback, right? That's always the rule, and it's no different than this advance here. That we're in at the moment. It's no different here, and I have label this again. There we go. 1, 2, 3, 4, 5 there, and as you could see. This 4 was very shallow, but very vicious. So I think I'm okay with that degree of being just so vicious. But there it is, and there we go. So you trade enough with me, following me, we always lose the whole fifth. It's an extended fifth on an extended fifth wave, and extended fifth wave here. This fifth wave, and my overall count puts a 2. At the 2009 low, and a 3, a 4, and then a 5, and then we have to pull back in 3. We have to give back in 3, and there's a lot of divergence to show that. This peak to that peak, this peak to that peak on the weekly time frame, the monthly peak, peak, peak. Again, divergence, divergence, divergence. Again, you just see it time and time again. These peaks playing out. Quarterly chart, secular bear markets are born here. Peak, peak, peak again. So I think it's the market is slowing down. The market wants to top in. It has a secular bear market that it will enter to allow the monthly cycle to reset itself. As you could see, we have not had a monthly cycle reset in a long time. It has been a historic bull market. We have not had a monthly cycle reset on this all the way since 2009. Is overdue. This bull market is way overdue, way overextended. It should have, happened right here on March 2020, but an extraordinary amount of liquidity was pumped into the market to keep it going. But we all know that is come to an end, and now the market will have to stand on its own foot. It can't. The recession will come, and then if commodities, money bleeds into commodities, this will just kind of come all the way back down. And we've seen this in history before. It will just come all the way down, and then maybe by 2030 or so, this thing should be down here, and then we'll be ready to buy the next secular bull market out of this mess. Unlike some people, I believe our bottom will be here in this area here, ideally on this line right here, wherever that tags, 200, 190, somewhere there. But some people believe it'll go even lower than that. I don't think it's going to go full round trip down to the 2009 lows, because my count is that this is a 1-2 here. 1-2, that this wave 1 was corrected everything here, and then 2, and then 3, 4, 5. A lot of people feel that 1-2 is the Great Depression, and then this is all 3, 4, and this whole thing is 5. A lot of traders believe, Elliot wave theorists believe, that this is all 5, and of course if that's 5, we would lose that whole 5th, which would bring us back down to 60 SPY or lower, which would be the world would probably not be a nice place to live if that is what happens. But I don't believe that will happen. So there's so I think there's 3 scenarios as we top. There's a scenario where you get a pullback back down to 480, and then you rally into mania mode. Here 480, stand within this channel, and then it's mania mode time, channel support, boom, mania mode. Or you get the crash down to the COVID lows, and a new secular bull market is born for the next 70 to 80 years, of course, with pullbacks. And then you have the triple Qs. The other scenario is the dire one, where it's correcting the last 300-year cycle, not 90-year, and then that will just absolutely obliterate the market from there. So anyway, so that's where I'm thinking, guys. Right now, there's a lot of gaps that haven't filled. They will all fill. At some point. So the market is in trouble, danger, red alert, but investors are asleep at the wheel. They're asleep at the wheel. It's going to be a tragedy. Looking back, it'll be so obvious, but a lot of investors, they're coming in at the end, and they're going to lose everything. So let's go through the markets real quick, and I'll show you what I've got here. Hang Seng, it was a bull trap. If we could push even lower, then I think it absolutely confirms this is a corrective move. And then I would want to short any bounce against this high, and that should be it. Now, if the bulls can take this high out, then they have an impulse off the low. 1, 2, 3, 4, 5. Then that would be significant, and that would change the dynamic, right, of the market. Bitcoin is struggling here. It did take a dump. I warned people about this C wave coming. This C wave. What was interesting today in MicroStrategy, I was just kind of taking a peek through some of these. MicroStrategy actually pumped so significant. It broke its I think it almost broke its all-time high here. This was the reversal area but Bitcoin obviously didn't make it to 72. So this was a divergence there. And so if MicroStrategy's got this push coming, if this really did top, just like I have it here, and then maybe we got to be, what I would say is with Bitcoin, you still want to be like kind of careful with it, because it could do a trap where you don't get this bounce here, where you get this capitulation move, just kind of something where this is 3, 3, and then you get another 3, and then you get that bottom here at 42, and then you can come out. And so that's why you got to be careful trading it. You got to be real nimble in this market. But obviously, if we break this level at 452.6, I think that's pretty much where you'll go, is down to 42. You break 42, it'll be a catastrophe in the crypto market, panic selling like we've never seen. The market would come back, probably to retest this low in January 23. And then you also have to understand that this could be a big flat pattern. The flat comes back into play, and we could even break that low in the panic. And believe me, there will be massive panic, and it will be a tragedy, because a lot of people, they put their whole paychecks in crypto. They believe in it. They'll die for crypto. They have Bitcoin tattooed on them bodies, and they just will be so like betrayed by what they love so much. And it will be hard. It's going to be really tough, but it's just a brutal bear market and a grand super cycle finale, creating again an opportunity of a lifetime for those who have capital left to take advantage of it. So my advice is, have some money on the sidelines just in case, the unthinkable happens in crypto. It's not something I'm calling for, but it's something that technically can play out. And but a stock like MicroStrategy is telling me, if MicroStrategy peaked at its all-time high, but Bitcoin's trading at 64, Bitcoin wasn't trading at 78, so that or 72. So that's a divergence. That's an alignment of the market. So MicroStrategy was getting realigned to the market, and once it did, now the market could continue lower. It was essentially preventing the market from dropping. But now the alignment is there, the market can drop. So that's why I'd be really careful chasing this dip. If you want to buy it, I would have tight stop on there and not put your whole stack in. Be careful. Oil is in the moment of truth. We either get this fifth wave or we don't. If we don't get this fifth wave, then it's corrective, and then oil is going to just collapse here, and it should be a beeline to 56. And the energy stocks will all dump, all of them, in a corrective move, and everyone's trapped. But if we get this fifth wave, then the bottom is in energy. Of course, it could pull back. It could also be a 1-2-1-2. So very dangerous chart there. Gold, I still missing a fifth swing here. Again, I could be off by a swing, but we'll see if we get that fifth swing. Silver, again, looking for one more high. I could force the labeling to call it finished here if I wanted to. So just be careful. It could be done. Like we're obviously close to the end of these cycles, major cycles. You're seeing the alignment across the market happen. Dollar index bottom showed the wedge. We have a massive breakout. This is a typical wave 3 breakout. So this is also probably keeping crypto it's holding crypto back, I'm sure. And look, that's a 1-2, and we have a breakout. So this breakout right there tells you we've got a bigger extension coming. So the dollar's got more upside. Now this could still be a B because it was so shallow. We'll get a pullback, but that will be supported. So this is telling you that the dollar's got more upside coming in the future, which usually is risk off for the market, or at least for the precious metals and crypto to some extent. Everyone's just like dumbfounded about what the bond market is doing. So here we are. If we did make a major low, we're looking for the break of this trend line. Obviously, if this wave plays out and we get the rates start to go uncontrollably higher in either a constitutional crisis of some kind or a combination of debt fears, you know, and Treasury, you know, sell off with that, that's could create that situation. And we're getting a nice turn here. But it is due a pullback, a relief rally. And as you could see, we definitely broke this cycle, right? We broke this cycle here. And then on the weekly cycle, we have not broken it yet. So what we have is this cycle's done. So if we do break this low, we will extend this cycle down. So you have an A, B, 1, 2, you'll get 3, 4, 5. So that would really open up more downside in rates. So this is an important low for the bond bears to hold here at 3.5. If 3.5 breaks, if it could pull back and break that, then it really does open you up for the low twos. So that would be a real big collapse. So that's why it's important pivot that needs to hold. As long as it holds, rates should continue higher and be supported for upside. But if it breaks, then you could see that 1, 2, 3, 4, 5 type move. And then we could see a bottoming process. The VIX isn't selling off like you would expect at all-time highs. It's building higher, which is essentially how crashes happen. The VIX builds higher as all-time highs are made. Let's just go back in time and take a look at March 2020. If we go back in history, we kind of saw the same phenomena leading up to the crash. So as you could see, the VIX bottomed out in December 19, and we slowly went higher in January. Here it is, January, and now here we are still in January. We're still in February, right? We're still in February at 17. I think the market was making new highs here, but yet the VIX was making highs. The VIX wasn't down here, but what was this telling you? What was coming? The same thing's probably playing out. The VIX is the warning sign. People, eventually, you know, the person trying to push the market up with the VIX is slowly losing control, may have lost control, and eventually they'll capitulate, and when they do, this will spike and the markets will essentially crash as this plays out. Today was an interesting day that you did not get the VIX crush that you would have expected. So anyway, I went through the overall market, guys. So yeah, it's a very dangerous time to be long. I kind of leave you with another chart. I always like to show the long-term chart of the Dow Jones here. As you can see, the long-term chart of the Dow Jones is essentially vertical now. You know, there's a method called stickman charting. It's called the stickman chart method. It's a really good, quick way, you know, for beginner chartists to just kind of draw these lines just like this. And when the sticks are vertical, it means sell, and when the sticks are horizontal, it means buy, right? So what do you see here? I mean, you see we're essentially vertical. I mean, maybe I could get one more in here, just like this, right there to there. So we're very close to vertical now. We're so close to the just vertical. So I mean, what are we gonna? Are we gonna go that way? We can't go that way. So as you can see, we are in the end of this parabolic advance. As for every dollar you put into the market, the market needs, let me say it this way, for every dollar higher the market needs to advance in a parabolic exponential move, you need exponential amount of money or energy to push it higher, right? That's the law of exponents, right? You know, this is like exponential energy. So the same amount of dollars to move the market down here, you know, is not linearly proportional to what you need to make the same move here. It's exponentially more. And so eventually the mathematics, you run out of money and you just it can't go up anymore in this kind of fashion. It's too late because of the law, the parabola, the exponent, exponential advance move. So if people say there's no money on the sidelines, well, it looks like everyone's all in. This chart looks like everyone's all in. Oh, everyone's bearish. Does that chart look like everyone's bearish? Doesn't look like everyone's bearish to me. I just see a lot of bullish divergence here at the top that is extended. So I mean, I look at this chart and I'm like terrified. Why would I put my whole stack in, be so complacent, and just be on autopilot? I mean, do you really think the market's just going to go like that? You think it's just going to do this? Do you think that's what's going to happen, guys? Right? No, not even in hyperinflation. Like it won't. It's not gonna happen, guys. This is over. This move is essentially over. And once the bubble pops, that's it. It's going to unravel. This thing will collapse down. And like I said, it will collapse down. And it's a really simple Elliott wave labeling, right? It's a very simple label, right? It's a very simple label here, right? Very, very simple way to label it. As you can see, there's your 3. There's a, now, so be like, well, that's a 5 there. Well, it's too extended. So obviously we're an extended 5th. So you see how big this 5th wave extended? It has no business being this long, but they did. They're pumping the bubble. They're pumping and pumping. They need you to buy. They need this to keep going. They need to legitimize the policies. The governments need high indices. People worship the indices like they worship a deity now. I mean, it's crazy, the market, how crazy in the mania the market is. So here it is. There it is. And so I was waiting for this 4, but you're like, where did the 4 come? Well, the 4 is right here. The 4 came and went, and it was just a quick shallow 4, and it is what it is. And now we're in this 5. That's how it is. That's the chart I see. And you're just gonna have to understand, like, this is what's in front of us. This is what's in front of us, guys. This is what's in front of you guys. And you're just gonna have to understand that, like, this is over. This bull market is coming to an end. And just because you feel like it should go higher because you just got in, it doesn't matter. The baby boomers are selling now. They're retiring, right? They're gonna retire. And they're gonna sell their bags. And that's going to put downward pressure on the market, guys. It's going to. It already started. And the demographics aren't there to buy the dip. You're going to have unemployment, may not be rising, but the labor force is shrinking. While the unemployment rate may be steady, the wages are lower wage jobs. The higher wage jobs, there's a recession, a white collar recession. Tech got rid of those high paying jobs. Which kind of cut their arm off, to spite their face here. So there we go. So this is it. So this is the count. This is my count on the Dow Jones real quick. The divergences support it. Don't be delusional. Don't fall asleep at the wheel. Don't be complacent. Don't think you're so smart, it's just going to do this. I'm just going to hold through this, because you could be holding through a massive correction that you probably will panic and sell, and then end up losing all your money as you panic sell, or need to sell because you have no job anymore and you're forced to sell down here. So that's that. Or you could sell now and just wait for better conditions. So you could get this correction here, right? Like I mentioned, you could also get this extension in 5, right? If you're super lucky, you get this extension in 5. Right, and wave 5 does something like this, right? Here, and I would be more like I think like a 1, 2, something like that. You get this like another mania top, right? Something like that. So that could happen, right? And then, or what if I'm wrong, and the real bearish case is right, where this isn't a 1, 2. The 1, 2 goes all the way, the 2 goes all the way back to the Great Depression, right? And then this is actually a 3 here, right? And this is a 4, right? And what if that's 5, right? And then I just relabel this a little bit differently, right? I could just put, just a little bit different, where I put the 1, 2 here, and then I could put this 3 here, right? A 4 here, and I could put the 5 there. Even more elegant, right? Well, what's going to happen here? Well, this means this whole thing goes, so this would just come right down like that, something like that. That's how that will play out, something to that effect. Talk about panic. And then what happens to our palabra? The bubble pops, and just like all bubbles do, right? This goes back. So this is the South Sea bubble collapse, like analog. We hit this trend line there, the historical uptrend there, and and then our grandkids look back and go, wow, you traded through this? That's crazy. And then one day, probably when we're all dead, this whole thing gets to happen all over again, and then a whole new generation pumps the market, and it goes crazy. And then they're saying, damn, I wish I would have bought down here at SPY 6,000, at Dow 6,000. But that is not what I think is going to happen. I do think there is too much liquidity to allow that to happen with government intervention behind it. So I do think the best case is, for the market, which makes a lot of sense to me, is you get this move, and then the bear market comes down somewhere like this, and then something like that. That's what I'm looking for. Something like this. Something like that is what should play out, and then we'll have a historic bull market, way beyond our this should get us to much higher prices in the next decade. I think this will play out fast. So I think these bear markets play out fast because of computerized trading. I don't think you'll get a slow bear market here, like a 70s takes 10 year. I think this will be a fast over probably by 2030 at the latest, something like that. That's what I'm thinking we'll get, something like this. I don't think we're going to get a big, long drawn out bear market, because wave 2s typically don't have that. Usually it's a wave 4, and this is a grand super cycle wave 2. So this should be panic crash type market. When this 3 finishes, when we're all long and dead, this 4 should take many this could take the 10 to 15 years to play out. But this is what's I think in front of us. And don't be asleep. Be careful, and just know that there's a lot of catalysts out there that could create this. Don't be naive to think that none of those issues could get worse. They can get absolutely worse. History is full of calamities that no one anticipates. Situations that people think are unthinkable happen all the time. And now it's time to start to think about those things and get prepared. And I believe a lot of people will not be. And then, of course, a lot of people will buy this A wave and then lose all their money when C comes, right? Which is what happened. There's this famous trader, right, that shorted the Great Depression, made hundreds of millions of dollars, but then he kept trying to buy the dip as it crashed, and then he ended up losing all his money, and then he ended up killing himself at the end. So don't be like, I think his name was Livermore. Don't be like Livermore. You're gonna have to be very patient and let this play out. If you follow me, it's always between the 4 and the 2. You always lose the whole 5. So this is the area you'll have to be patient for, no matter what happens here. And they could take a long time to get there, potentially until the 2030s. Good luck, and we'll see what happens in the next couple weeks and see how these things play out.